Hey there, and welcome to an update on my ETF retirement portfolio. Now, if you're new to the channel or new to this series, essentially I'm taking real money every month and putting it towards a very simple portfolio that's made up of only a couple of different ETFs. And the idea with this portfolio is to have a few simple investments that are just so easy to manage that I can put a few $100s in whenever I have some spare cash lying around, and that over time it's a very well risk-adjusted way to see a snowball effect and eventually lead to my retirement. And in today's video, I'm going to show you which three ETFs are in my portfolio. Currently, I'm going to talk about the allocation and why I allocated a certain percentage of the portfolio to each one of those ETFs. And I'm also going to add one new ETF to the portfolio at the end to round it out. So without any further ado, let's hop into the portfolio here. Now you can see that over the past couple of months, I'm up 1%. The markets have been relatively flat since I started this portfolio, but honestly, it doesn't really matter. In fact, I would actually love it if there was a market pullback or a market crash sometime soon, because then I could load up on more shares, then bring my dollar cost average way down. And then since this is a retirement portfolio and I don't plan on touching this for a very, very long time, that's not going to matter in the long run. So let me show you what's in the portfolio. There's three ETFs currently. We've got VCN, which tracks the Canadian total stock market. We've got VIU, which tracks the developed global stock markets, excluding North America. And then we've got XUU, which tracks the US total market index, not just the S&P, but the total market, including some exposure to small cap and mid cap companies. Now the portfolio allocation is as follows. I'm trying to put 50% of my total funds into the US market, which is XUU. And currently, if I look at it, I'm sitting at 49.82%, so pretty close to the target. The reason why I'm targeting 50% of my total retirement portfolio to this one single ETF is that essentially the US market is the benchmark for the global economic success. If we look at the historical record, over time, the US market has returned some of the most secure and stable return on investment that you can find anywhere out there. And as you can see from the 5-year price chart, it has historically performed very, very well. And the way I see it is that if this ETF crashes to zero or something terrible happens, it's essentially going to mean that the total US economy has failed and we're probably all screwed anyway. So I think this is one of the most secure places to invest, and I also believe that it has strong potential moving forward. The next largest position size in this ETF portfolio is VCN, which tracks the Canadian market, and I'm targeting a 30% allocation for this, and it's currently sitting at 32%. Now the reason why I'm investing in the Canadian market separate from the US market is that it has a focus on different types of stocks. So the Toronto Stock Exchange is much more heavily weighted towards the financial sector, towards the energy sector, and it's got a couple of big tech companies in there as well, with Spotify and a few others. But the point is that the Canadian market does not necessarily move in lockstep with the US market. Generally speaking, it might follow similar trends, but for instance, if the energy sector is having a really good year, then this ETF is going to perform better than the American ETF. And the third ETF in the portfolio to round it out with some global exposure is VIU. And like I said, this tracks other global developed markets, excluding North America and also excluding mainland China, which sometimes falls under the emerging markets ETFs. But I chose this one specifically because I did not want to invest in mainland China. My target allocation for the portfolio of this one is 20%. Currently, we're sitting at 18. So I'm probably gonna bring that up a little today as I buy some shares, and I'm gonna move to that in a second. Now, historically speaking, this ETF has not performed as well as the US total market ETF, but the reason to include some global exposure here is just like with the Canadian case, these markets aren't necessarily going to move in lockstep. And for instance, if there's some new companies that are emerging in Europe or Australia or Japan, other global developed markets, then you probably want to have some exposure to those as well, because the greater the diversification, the better for a portfolio like this anyways, which is all about diversification. And speaking of diversifying your portfolio, with these three simple ETFs, these three simple investments, which I can just continue to dollar cost average into month after month, I have exposure to almost 9,000 companies in total. That means that every time I buy shares in these three ETFs, I'm buying tiny amounts of fractional shares in almost 9,000 companies worldwide. And this is pretty much one of the safest ways that somebody can invest their money, aside from putting it into bonds or other fixed income assets. And the reasons why I'm not including any of those more conservative investments in this ETF portfolio are twofold. First of all, I'm still quite young. I'm very far away from retirement, so I'm not so worried about the security that comes with fixed income, and I'm more focused on growth at this stage. And as I get older, I might try and shift some of my portfolio allocation away from growth and stocks, equities, and towards bonds or fixed income. Secondly, I already have a very generous and secure pension fund that's being invested for me through my employer, and they're taking a much more conservative approach, including bonds and fixed income and things like that. So I figure I'm safe here to go for broke if you can consider investing exclusively in these types of ETFs as going for broke. Anyways, now that I've shown you the whole portfolio, discussed what's in it, and also explained why I'm allocating a certain percentage of my portfolio to each one of these ETFs, let me tell you what I'm gonna do today. So as I was thinking about this portfolio over the past couple of weeks, I realized it's kind of like your grandpa's retirement portfolio, and it's not necessarily reflective of the current state of the markets. And what I mean by that is cryptocurrency is an emerging part of the market that has huge upside potential, and even a lot of certified financial advisors are starting to say to their clients that you should probably allocate at least a small percentage of your portfolio to cryptocurrency. And so I think I'm going to switch up my allocations slightly and add a new ETF to this portfolio. And that ETF is going to be ticker symbol ETC, or the Evolve Cryptocurrencies ETF. Now, I've already done another video explaining this one in much more detail, but essentially this is a multi-crypto ETF. They invest in both Bitcoin and Ethereum, and they bundle it together into this one product, and that can give you exposure to those two crypto assets with an allocation of, I think, 65% Bitcoin and 35% ETH at the moment. And the reason why I'm choosing this ETF over some of the other spot crypto ETFs in Canada is because it has that multi-crypto focus. So it keeps my portfolio as simple as possible. I only have to add one product to it, but I get exposure to the two largest cryptocurrencies in the world by market cap, and the two most established cryptocurrencies that probably have the most staying power and arguably the most potential moving forward. Also, if I zoom out, we can see that the crypto markets in general have taken a bit of a tumble recently. They're down over 20% in the past couple of months, and so I figured this is actually a pretty good time to be adding this to my portfolio. Now, I'm going to set the target allocation for this new ETF at 5% of the total portfolio, and I'm going to take that from the VCN ETF, or the Canadian market ETF. So the new allocations are going to be 50% US market, 25% Canadian market, 20% global developed markets, and 5% crypto. So today I'm going to buy 8 shares of the ETC ETF and add that into the portfolio. Now, I still have $90 left in the portfolio, so I'm going to do a couple more trades quickly, and I'm just going to add one more share of XUU and also one more share of VIU. Now, let me tell you why I love this investing strategy in particular. First of all, it's incredibly simple. It's great for beginners, and along with that, there's really no pressure or anxiety that comes along with it, because you're just adding some money every time you have some, and you're just dollar cost averaging. So the price of these ETFs doesn't matter to me at all. I'm not concerned with trying to time the market and maximize my price every time that I buy these ETFs, because over time, I'm going to be buying more shares when the markets are low and less shares when the markets are high, but it's going to even out and it's going to have a snowball effect. Also, the diversification of this type of investing strategy is amazing, and it really decreases the amount of volatility in the portfolio. Now, to illustrate the point, let me compare this really quickly to 2 other portfolios that I've been making videos about on this channel, because I'm doing some experiments with investing in penny stocks and also with investing in crypto. So first, take a look at this chart and see how little volatility there is week to week, month to month. Now take a look at this chart, which is my penny stock investing experiment, where I took a bunch of money and invested in 30 totally random penny stocks, which is ridiculous, but that's for another video. Anyways, you can see that this portfolio with the penny stocks is down 13% over the last 3 months, and you can see just how much more volatility there is. Some of these stocks are moving, plus 50%, minus 50%, it's all over the place. But with the ETF investing strategy, that volatility is really just raised to a bare minimum. And third, take a look at my crypto investing experiment. My total portfolio over the same period of time has ranged from 1684 at the low end to almost 2,300 at the high end. So that's a massive price differential. And that's not because I'm adding substantial new amounts of cash. This is literally just the price fluctuations and the volatility. Anyways, I hope you enjoyed this video and found it helpful. If you did, you might also enjoy this one. And if you want to follow along and continue to see updates on this ETF portfolio, as well as on my other investing experiments on the channel, please don't forget to hit subscribe, and I'll see you in the next one.